Good morning. It is November 4th, 2025 at 8 a.m. and this is a special meeting of the MW&L Commission. Trina, can you do a roll call?
Yes, Mayor Morris,
Here.
Commissioner Tankersley,
Here.
Commissioner Elmer,
Here.
Commissioner Garvin is on a leave of absence, and Commissioner Macy Baker.
Here.
Perfect. Thank you. Today's presentation is a financial audit report by Baker Tilly and a notice of management letter, and we have Mark Dunmeyer. I'm not sure if you're going to start or they are.
Yeah, I'll go ahead and start us. So, thank you. Good morning. Thank you for meeting this morning pretty early. We're doing this so that we can have opportunity to review the draft audit, and this is in preparation for a signed completed audit to go into the packet for the regular meeting in a couple weeks on the 18th. So yeah, our auditors are here, and we were grateful very much for their help this year in working through our audit to this point. We'll go ahead and turn the time over to them, and then when they're done with their presentation, then I'll kind of take us through the audit report itself, and talk about any changes that we have. I've got a couple that we would like to share with you at this time as well, but see if any of you have any added items for us, and then we'll talk about some key dates that are coming up after this. So we'll go ahead and turn it over to Keith and Ade, both of Baker Tilly, for us.
Perfect. Well, thank you all for having us here. I know it's a little bit different of a time frame and things a little bit than previous years. I know we used to kind of go to the audit committee and different things, so a little bit of a change, but I think now we can kind of share more of the results to the wider group and kind of go through where we're at this point and where we go from here to kind of get this closed out. So appreciate all your participation and engagement today. At this point, we've gone through our audit field work. We had our team on site for about a week and a half over the course of our initial field work, where we looked at the processes and procedures and internal controls, and then probably another week where we came back out once the books were closed and kind of did our final testing over the financial statements. So I think we've got a brief presentation. I can go ahead and share my screen here and pull that up in just a second.
Yeah, testing my audio, Keith. Can you hear me okay?
I can.
Okay, perfect. I also have it up if you don't have it. Perfect.
I beat you to it.
Okay, awesome.
And one thing I just want to mention right off the bat, I think most of you are aware of this, but me and Ida have been on the audit for a number of years, but we used to operate as Moss Adams, and now so you're seeing same people, but operating as under the Baker Tilly name, right? Because we entered into a merger that closed this last June with Baker Tilly. Some of you may be familiar with that firm and their name. I know they were very active in the utility space as well. They were very industry focused, just like our firm was as Moss Adams. So excited about the merger and kind of the scale that it gives us. Moss Adams historically had been kind of located up and down the West Coast and into as far east as probably Texas. And then Baker Tilly was located, headquartered in Chicago, kind of mostly located in the upper Midwest, and then into the Eastern Seaboard as well. So very complementary footprint, very complementary industry specialties, and the fact that they, specifically for Ida and myself and others within our power and utilities group, very excited to kind of work with their team because of the expertise they had in this industry too. So excited to kind of continue to work through this merger. It's something I never thought I would go through in my career, but definitely it's kind of changing kind of the size of what we had before as just Moss Adams, and kind of bringing these specialties together and bringing a deeper bench to the overall engagement. So excited about that. Okay, with moving forward, we're going to go through a number of things today, which I'll jump right into our scope of services. This is just kind of a reminder of the different things that you can expect to receive, or the different services that we provide when you hire an independent CPA firm to come in and do the audit of McMinnville Water and Light Department. The audit report that you're probably most familiar with is going to be the audit report over the fairness and accuracy of the financial statements, right? So you're hiring us to come in, follow all of our professional standards, do all the testing that we need to do to gather enough substantive evidence to get to the point where we can say, we believe these financial statements are free of material misstatement and are a fair and accurate representation of the department's financial position and results of operations for the year ended June 30th, 2025. So that's kind of first and foremost what you're looking for, to see, hey, did we get a clean opinion, right, that we can attach to our financial statements? Any third party that we need to provide these to, they want to see, did you have an audit completed? Was it performed by a firm that was licensed to do that work, which Baker Tilly definitely is? Did you get it completed timely, which this is kind of the time frame that we've typically been on and kind of finalized around this November timeframe in the past. So we're right in line with that. And did you get a clean opinion overall, right? Meaning, hey, did you have someone that went through all these books and records and got to the point at the end of the day where they said, hey, this is a good picture of where the district or where the department stands as of June 30th, 2025. We also have another report that you'll see within the financial statements each and every year that's required by the state of Oregon. Whenever an independent CPA firm is doing an audit of an Oregon municipal corporation, which McMinnville Water and Light qualifies as that, they also want us to look at certain key compliance areas, making sure that you're following certain state statutes as it applies to procurement processes, as it applies to where you're parking your funds or which depositories you're parking your funds with. If you get into any investments, are those investments in line with the state statutes? So there's a number of different things they want us to look at. There's a bullet point list that's included in that report, and it gets attached to your financial statement document as well, typically in the back, whereas the other audit report's kind of towards the front. And we note if we, through the testing that we've done, do we identify any instances of non-compliance with those state statutes that they want us to look at? So that's unique to the state of Oregon. You're not going to find that in other utilities and in other states. So definitely something that's unique to the state of Oregon. But that's an additional report you'll find in there. Over on the other side where we say non-attest services, these are things that are kind of ancillary to the audit related to it, but kind of additional procedures that or things that come with this process. One, your team each and every year kind of asks us to assist with putting together that financial statement document itself that our audit report gets attached to. So even though we kind of help with putting together that report and kind of the form and content and presentation that comes out of that, that complies with the governmental accounting standards, all the numbers, all the information stems from the department, from the finance staff there that track the information all throughout the year and book the journal entries and summarize the information, provide that to us for audit, right? So we're kind of just helping with putting that together in kind of the form that's required by the Governmental Accounting Standards Board that you're required to follow. And then finally, we issue a letter to those charged with governance. This is an additional kind of document that gives you more insight into how the audit process went. So in addition to just, did you get a clean opinion or not, this tells you, did you run into issues along the way? Were there delays? Were there change orders? Did you run into any audit adjustments? Did you have any recommendations? Those are the types of things that you get out of that letter, which is separate and not attached to your financial statements, right? That's intended just for the governing body of the organization to use. So those are the different things that we typically kind of provide at the end of the process. As we're going through the process and doing our actual test work, there's a number of areas we sit down as a team, we talk about, well, where do we want to focus the bulk of our time and our efforts? This isn't to say these are the only things that we're looking at. That's definitely not true. We have to kind of risk assess each and every kind of line item that's in your financial statements, whether through balance sheet or income statement. But we kind of talk about, well, where do we need to spend the bulk of our time? And so these are kind of our main focus areas. Some of these change from year to year. Some of these are consistent, just depending on kind of the size of the balance that we're talking about, the level of activity, the number of internal controls or processes and procedures that need to be in place to make sure that those items get reflected correctly in your financial statements. When new things come up, whether that's new accounting standards or new transactions that you enter into that are significant, those might pop up here as well. And then we have another one here on the far left, management override of controls, that we have to have on every single audit that we do. So that is not a unique thing where we've said, hey, we think this is a concern at McMinnville Water and Light. That's definitely not the case, but it is something that our audit standards require, that every audit that we do now, we have to say, we have to incorporate some procedures into our audit to be cognizant of the fact that there could be management override of controls happening. So that's something that we have to keep on the lookout each and every year. So you're going to see that one on here going forward. You're going to see that on all of our audits going forward. Utility plant, this is one that you'll see on there each and every year because of the size of the balance, because of the level of activity, the number of internal controls that have to be there, right? So making sure that you get all the right costs in there and the right projects and it gets closed out timely, and you start that depreciation process timely with the right useful life for those assets once they're constructed. That's a key area that we look at and do a lot of testing there. The new standard that McMinnville Water and Light and every governmental entity had to adopt this year was GASB Statement 101. You don't have to remember the number there, but the key was this one impacted compensated absences and how governmental organizations have to recognize, how they define and then recognize compensated absences on their financial statements. So when do they have to record an accrual for compensated absences for that liability? And then also the measurement criteria. So at what dollar amount do you have to record these at as well? So there was some new key guidance. This isn't a new concept of recording a liability for compensated absences. This is something that many governments, including McMinnville Water and Light, had recorded in the past. But this did change some things in terms of how you look at it, how you define compensated absences, like I mentioned. And I'd say the biggest change there that many governmental organizations experienced, McMinnville Water and Light as well, was how they recorded a liability for sick pay. So if the organization offers sick pay, a lot of times in the past, organizations were not recording that because it was not required to be paid out upon termination. That was fine under the old guidance. Under this guidance, it requires you to actually do an analysis and determine, well, you know, what's the amount of the liability today that employees have earned in terms of sick pay hours that is more likely than not to be used in the future by those employees. And so that's something where your team had to do some analysis and put an additional or increase their liability as a result of that additional sick pay portion coming online. So that was something that we spent a lot of time taking a look at and talking with your team about it, and worked very closely with Mark and the finance team, not just during the audit, but kind of leading up to the audit and everything too, and having some good conversation and back and forth on how they were putting together that analysis, which we really appreciated. We always have to look at the compliance with those organ minimum standards that I mentioned on that additional report that we issue. And then we spent a lot of time looking at the revenue side of things. All the internal controls that have to go in place to capture all the billing data, to analyze it, go through exception reporting processes, and make sure at the end of the day, the bill that gets to the customer is for the right rate, for the right rate class, the right usage, and it's calculated appropriately, right? And then at the department side, that you're recording that revenue accurately as well and reflecting that in your financial statements. So we spent a lot of time in that area as well. So what are you going to see at the end of the day when we finalize all of our reports? Our report of the fairness and accuracy of the financial statements will have a clean opinion, meaning, again, through all the testing that we did, felt the underlying evidence supports what has been recorded and reflected in your financial statements. The organ minimum standards report, we didn't have any compliance findings. So all the compliance testing that we did over those various areas that I mentioned previously did not identify any compliance issues or any areas where you're out of compliance. And then in our communication to those charged with governance, a lot of things that we're going to talk about that's in that letter. Ida is going to go over that here in just a bit. But the key thing that we always want you to note that you would see in that letter is, were there any material weaknesses in internal controls? That's kind of the red flag language you want to be on the lookout for. But we did not have any recommendations or issues with internal controls that rose to the level of what we would call a material weakness. I think with that, I'm going to turn it over to Ida. She's going to go over kind of what's in that communication to those charged with governance.
Awesome. Thank you, Keith. So as Keith mentioned, some of our required communication, as outlined by the auditing standards, includes the following points where we'll be going through, but please note a more formal letter will be provided upon issuance. So that letter to those charged with governance, but I think this kind of slide in the next does a great job of really summarizing some of those key points. To start off, so our auditor's responsibility under the standards. So it's our responsibility as auditors to communicate to the board, again, any findings, as well as then also perform a qualitative review of accounting policies, accounting estimates identified by management, as well as the financial statement disclosures themselves as presented on the statements. as well in this letter and some of our required communication, we are required to communicate any significant accounting policies, which, as Keith mentioned, the biggest, new policy you'll see this year and a new disclosure included in the financials, as well as the audit report, is the adoption of GASB 101. So you'll see compensated absences kind of as a new line item there on the balance sheet, as well as then as a separate financial statement disclosure, noting that change. We're required to also communicate management's judgments and accounting estimates, which for the current year, those estimates that we really kind of thoroughly reviewed and looked at included the allowance for doubtful accounts recorded at year end, recovery period over the cost of plant assets on the books, as well as OPEB and pension obligations. So those were kind of some of those key estimates that we really focused on this year, very similar to years past. We're also required to communicate any corrected misstatements, as well as any uncorrected proposed adjustments. And so kind of further down in the presentation, we will be discussing some of these items that came up as part of our audit procedures, but definitely don't want to get ahead of myself there. Next slide, Keith. Great. Again, we're required to communicate if management consulted with any other accountants or third parties, which none that were brought to our attention arose, any significant or unusual transactions that may have occurred during the year, something outside of kind of that normal scope of business operations. And so we noted no unusual transactions in which, accounting guidance wasn't available for, as well as any difficulties performing the audit or disagreements with management. As Keith noted, management was great about coming to us with questions, and we really encountered no difficulties or along those lines, disagreements as well. We are also required to communicate any audit observations and recommendations in the current year, which no material weaknesses were identified, but we do have a best practice recommendation that arose this year as part of our audit procedures. Great. Our kind of new recommendation that you'll see this year is as part of our review over asset retirements in the current year, we did note that there appeared to be a duplicate asset there that was retired, leading to kind of a decrease in the balance sheet. So management did correct this, and so we'll kind of tackle that in the next slide here. But as part of our best practice recommendation here, we did want to just recommend that management perform a periodic review over retirements recorded throughout the year, but then also implement a secondary level of review once an asset retirement is recorded by engineering, just to kind of add that separate level there just for some of these items to be caught. And I know Mark, I think, was going to add some additional commentary on some of the additional controls that the district had implemented in order to kind of, mitigate this going forward. So I don't know if you want to chime in now, Mark, or at the end, but definitely I know you wanted to kind of add some commentary.
I could just chime in real quick. The issue that was identified, the auditors picked up looking at our both our asset additions and retirements. They saw a number that was larger than typical for retirements, asked us about it. We got in there, and initially we thought that looked okay. Until we recognized after looking at it further that we had 2 work orders for the same project, and both work orders had the correct number of assets added and retired if they were like unrelated. But because they were related, the assets were effectively duplicated both in the additions and the retirements. So the net effect of that was that they canceled each other out. And so that in the end, the total change of assets was okay. The additions and dollar amount was okay, but because the retirements are calculated off of the assets retired in the system, the retirement got doubled. And so what we came away with was we need to understand in accounting, as we close work orders, we need to understand which work orders are related to each other in terms of so one was a design work order, one was a construction work order. And so what we did, we met with engineering, and we also learned, we talked to our software vendor, NISC, learned that you can kind of you can organize work orders into a group through the use of a blanket work order. So that kind of puts a wrapper around work orders that are all related to each other. So that's helpful. So engineering is gonna use that feature which will help us identify those in accounting as those come up to be closed. And the other thing that we're going to do is our accountant who does the closing of work orders, Christy, is going to meet with the two folks in engineering that typically open work orders, and they're going to meet on a weekly basis for the foreseeable future until they feel like they kind of have a pretty good system of understanding how work orders relate, how they're opened, how they're going to close. So it's really just kind of a process of both groups being educated kind of on the same page, and we feel like that will identify these early on, and we'll be able to do a much better job at understanding and recognizing how to close these. We've also talked to NASC as to when we close these, there's things that we can do. It's interesting, on a design work order, you actually have to add an asset, even though it's part of another work order. So we can actually we can add the asset, we can remove the asset as it's closed, or we can move those costs to another work order. There's different options we can do. So anyway, we feel much better positioned to handle this better in the future, and we're grateful to go through that process and kind of improve our system as a result. So
Awesome. Thank you, Mark. Next slide, Keith. So kind of along the same lines, based on this correction that was then identified by management, they did end up adjusting asset retirements by approximately $434,000. And so this was a corrected adjustment, and again, will be included in the letter, but the numbers that you're seeing on the financial statements are reflective of this change. And as far as uncorrected audit adjustments, there were no uncorrected audit adjustments. So anything we did identify was updated by management. Great. Sorry, Keith. Next slide. Awesome. So upcoming accounting standards. So we have GASB 103 financial reporting model improvements. And initially, I think, some of us were a little nervous by this new GASB, as it appeared that it would lead to a lot of changes to the balance sheet and income statement. Ultimately, though, it just sounds like GASB wants kind of additional further commentary on the MD&A. So that's probably where you'll see the most changes. And so what they're really trying to get at is they want kind of management's description and analysis to include a lot more of the why behind why some of these increases or decreases are happening. So there could be some changes to the MD&A going forward next year, but just, again, not as heavy of an undertaking as I think GASB 101 was, or as we had previously anticipated GASB 103 to be. The new guidance there that we also have coming is GASB 104, which also provides additional guidance on assets held for sale and presentation of those items. I think the biggest impact there would be, if there are any assets held for sale, a new line item will need to be included there on the balance sheet from a presentation standpoint. But again, we don't anticipate it being very impactful to the financial statements as a whole. Next slide, Keith. Just want to take a moment to say thank you to John, Mark, and Shane. Again, they were more than happy to answer any of our questions, and we also really appreciate the diligence in any recommendations that we have or items that we observe, as kind of provided by Mark. It sounds like they are already tackling our best practice recommendation for the year. So, that's not something we see often, and we just really want to say how much we appreciate them and our consideration, and also willingness to ask us questions and stuff too, and obtain further clarity.
So I think that's kind of the totality of the presentation there. You see kind of our service team here wasn't going to go into that too much, although I'll just say there's more folks involved from our side than just the two here on our presentation between Ida and myself, and then in total here, the four that you see on screen. There's a few other staff that were involved and on site and kind of working with the finance team at the department to kind of go through our procedures. So it's definitely a number of people that are involved to get to this point, and of course a number of people at the department as well that play a part in this, whether it's kind of providing documentation to us or responding to questions or being available for interviews that we go through, and we're looking at internal controls. There's a lot of different folks and departments that we're talking to within MW&L Water and Light. We appreciate all of the participation and engagement along the way. So with that, I guess I will pause for any questions before we move forward to the, I think Mark's going to take it from here, but I want to pause for any questions on our presentation.
I don't think we have any right now.
Okay,
Okay, great. Thank you.
thank you guys for presenting. I think Thad's gonna bring up financial statements for us. A couple changes that we had noticed, actually, Trina picked this up after the financials went into the packet. So we'll show you today. It was a couple of dates that I missed. I had wrong on the BPA, their reserve distribution credits. That program ran for a couple of years. And so let me see if I can bring this in for us. So that completed September 24, not October 23. So, and as a result, then the description of needed to change. So I thought I'd just read this since this is the first time everybody's seeing this. I'll just read that first top section there. Combined operating revenue for electric and water increased by 10% from the prior year. This is due to an increase in consumption, a rate increase of 2.75% and 5% for electric and water respectively, and an increase in purchase power costs passed through to industrial customers, resulting in higher industrial revenues. The power cost increase was due to a reduction in BPA's reserve distribution credits compared to the prior year. So, and then those two noted changes below on the dates there. And we thought it would maybe sound better to say completion of that program rather than termination of it. So termination almost makes it sound like it ended early. And it didn't. It was normal. So there was a change on that page, and then one similar on page 12, same thing. So again, completion of that in early fiscal year 25, September 24. So that was the changes that we had just in the kind of the space of time between placing in the packet and now. One thing we'll do next year to again, we're trying to improve our process every year. And so what we'll do is when we get to a point where we have a kind of a first full draft with everything in, we'll provide that out to a broader group than just Shane and I and the folks in accounting. We make a lot of changes through this, but we don't see them all, unfortunately. So anyway, it was really helpful. Just right leading up to this, John saw a couple and we made some changes. And anyway, so we'll just continue to try to get more eyes on it before we get to this point. So was there anything that any commissioners saw in looking at the financials that they?
So I just want to clarify, so the number with the gas fee that we have to put the number in there, that's the new rule, but that still isn't being paid out at the time of termination.
That's
Or
correct?
sick leave.
For sick leave. But that's
Vacation,
still-
we do.
Yeah, sick leave, the policy of paying out has not changed.
That's something that we've been looking at. It's an incentive for notice of retirement. So that we can plan a little earlier,
Okay,
percentage of it potentially.
okay. That's the only question I have.
On that topic, as I understood, I think what the auditor said, it's not the total sick leave, it's you developed a percentage that
Right,
is what normally gets used, and it's that estimate.
right.
Okay,
Right.
thank you.
Any other questions? Lisa, I can't see you, but do you have any questions?
No,
Okay,
Oh, I have to do it. What do I do? Hit escape?
Just hit escape.
And then,
Stop sharing.
oh, I'm a bad driver.
you're better than I
Is
am.
that? So you got it? All right, thanks.
We're trying to find you, Lisa.
Lost in cyber.
Stop share.
But you can see my head nods.
There we
you
go.
go.
All right, was there more to go over though? Or is
The only
that-
thing that I was gonna mention would be just the dates that remain. So we'll submit the changes that we just looked at to the auditors, for them to provide us a final draft, and then, we will issue a management representation letter, which just confirms our, that we are responsible for the financial statements, and all the information contained in are accurate, that management is confirming that to the auditors, and with that, then they'll be able to issue their their audit on the 12th, which will give us time to get that in the packet for the 18th for the commission. And once it's accepted by the commission, we'll give that to the city.
Okay.
Sorry. So
Did we decide last year that we're gonna send the city a draft when you finalize it with the auditors before the commission approves it, so they could start working on integrating it with their financials?
So they last year let us know that their auditors wanted a signed copy, so we could provide the signed copy to them on the 12th when we receive it from the auditors.
Do they need that? Because their needs seem to drive part of our process.
Yeah, they want it as early as possible, so that would be the earliest we could provide a signed draft would be on the 12th. We could do that if the commission's.
Would it be a problem if the commission hasn't approved it to share that signed draft?
If it's not a problem with the commission, I don't believe so.
Yeah, the commission actually doesn't approve the audit, it just it receives it. So it's the auditor's obligation is to furnish the audit to the governing body. But if there's no action, you don't take an action except to receive it at your meeting. So the action right now is really just management's going to provide the letter representing that everything's correct. And so sort of at this meeting, we're sort of looking for a head nod that you don't see anything that would suggest that that management letter isn't ready to go. So we're ready to provide management. But otherwise, we could provide the city with audit when we get it.
Yeah.
And if the commission's good with that, we could just take that as a consensus direction for commission that we like this, the audit to go.
I can't recall us ever changing it after when it came to the commission. Changes happened now or
Right,
earlier, right?
Right. And this would be the appropriate time to
Yeah.
suggest changes.
I think if we can help the city out that way, we should do it.
Yep, I'm good with that too. There's your head nod.
Okay.
All right, anything else from us today?
No.
All right, any last questions from any commissioner? Nope, okay, then I'm gonna close the meeting. 8:33.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you all.
Thank you.
Thank you.